Coming up on Arirang News, President Moon Jae-in says South Korean companies have done well in reducing their dependence on Japan for key technology imports. Since Japan banned trade in some items, they've found other sources or have started making them domestically. South Korea continues to see a spike in consumer inflation, prices rising by 2.4% last month, mainly at the grocery store and at the gas pump. But inflation is expected to come down later this year. And the global tax regime agreed earlier this year at the G7 for big tech companies now has the backing of the OECD countries. This would put a minimum tax on big tech in the countries where they actually make their profits. It's 5 p.m. here in Seoul. Thank you for joining us on Arirang News. I'm Devin Whiting. President Moon Jae-in attended an event Friday to take stock of and recognize the progress South Korean companies have made in the past 2 years in reducing their dependence on Japan for supplies of key materials used in making semiconductors. It was 2 years ago that Japan unilaterally imposed restrictions on exports to Korea of these items, which presented local industry with a crisis. President Moon said the achievements in this regard were better than expected, and he highlighted the need for Korea to develop its own materials and tech in other areas as well. Kim Min-ji reports.
President Moon Jae-in is stressing the importance of South Korea developing its own materials, parts and equipment sectors and diversifying its import channels. He spoke Friday at an event held in recognition of the country's successful response to Japan's unilateral export restrictions on South Korea 2 years ago, which he likened to a surprise attack.
지난 2년 우리는 상생과 협력으로 아무도 흔들 수 없는 나라를 향해 전진했습니다. 무엇보다 기쁜 것은 우리가 자신감을 갖게 되었고 협력의 방법을 알게 되었다는 것입니다. 우리는 위기 극복의 성공 공식을 찾았습니다.
In July 2019, Japan imposed curbs on 3 key materials: fluorinated polyamide, photoresist, and hydrogen fluoride, which are used to make semiconductors. Tokyo's actions were widely seen as retaliation against South Korea and the dispute about wartime forced labor. President Moon says South Korea managed to turn the crisis into an opportunity by promoting cooperation between SMEs and large companies to develop homegrown technology. Dependency on Japan for hydrogen fluoride has dipped to below 20% from about 50%. The country now possesses its own technology for fluorinated polyamide and even exports it. Reliance on Tokyo for top 100 items used in local industries has also been cut down to 25%.
글로벌 공급망 속에서 우리의 강점을 살려나가되 핵심 소부장에 대해서는 자립력을 갖추고 특정 국가 의존도를 낮추지 않으면 안 된다는 것입니다. 소부장 자립의 길을 더 튼튼하게 발전시켜 나가야 하는 이유입니다.
Moon praised South Korean companies for their efforts and the capabilities they have shown, and called on the government to create support measures so that they can reduce dependence not just on goods from Japan, but across the entire materials, parts and equipment sector going forward. He also called on officials to support small companies that could get involved in patent disputes. Kim Min-ji, Arirang News.
Consumer prices in Korea rose by more than 2% last month, led by grocery prices in particular. Eggs were a major item because supplies have been hit by bird flu. Gasoline prices, too, were up, but officials think this will all settle down in the second half of the year. Jang Tae-hyun has the details.
Consumer prices jumped by 2.4% on-year in June, rising by more than 2% for the third straight month. According to data released by Statistics Korea on Friday, consumer prices for living necessities went up by 3% and fresh food by over 10%. The prices of agricultural goods spiked, with garlic up by over 48%, red pepper powder by 35%, and rice by more than 13%. Bird flu pushed the price of eggs by nearly 55%. The spike comes despite the government importing 20 million eggs last month. But the prices of cabbage and onions went down by around 20 and 15% respectively.
Prices of fruits and vegetables like cabbage and onions had been going up due to poor weather conditions, But because of this year's newly grown farm goods and early cultivation, the price has been going down since last March.
Diesel and gasoline prices increased by around 22 and 20% due to a rise in the price of crude oil. But officials from Statistics Korea are optimistic about the forecast for the second half of this year.
The price index for the service sector seems to be continuously going up, but the prices of farm and fishery goods will stabilize due to revived supply, and crude oil prices are not likely to increase further.
He added that prices will stabilize in the second half of the year. Jang Tae-hyun, Arirang News.
The International Monetary Fund says it's likely that the U.S. Federal Reserve will need to start raising interest rates in late 2022 or early 2023. In a report Thursday, the IMF said higher rates are likely at that time because the rise in government spending in the pandemic is going to keep inflation higher than the Fed's long-run average target of 2%. In May, the Fed's inflation figure was at 3.9%, and the IMF expects that to rise to as high as 4.5%. Before a rate hike, the IMF said the Fed will likely start tapering its asset purchases in the first half of next year. And while doing so, it said the Fed will have to pay extra attention to how it communicates these moves. At the G7 summit in May, leaders of the world's biggest economies agreed to move forward on a new framework to tax big tech companies on the profits they make in the countries where they make them. Now that plan has the backing of the countries of the OECD. This will have an effect on some big South Korean companies like Samsung and chipmaker SK Hynix, but the Korean government doesn't think the impact will be big, at least for now. Cho Ryong-hae reports.
Global leaders have agreed to overhaul the international tax system to ensure that large multinational companies pay a fair share of tax in the countries where they operate. The OECD says on Thursday that 130 out of 139 countries, which account for 90% of the global GDP, have agreed on a two-part tax plan. The first pillar aims to tax companies, mainly multinational tech giants, based on where their profits are generated rather than where the company's headquarters are and where earnings are declared. The new tax rule will initially apply to companies with more than $23 billion of revenue and a pre-tax profit margin of more than 10%. Around 100 multinationals are expected to be subject to this. The OECD says the new tax rule could bring in $100 billion of extra tax revenue. The second pillar intends to protect countries' tax bases and make it harder for companies to use tax havens. The global minimum corporate income tax under the second part is set at 15%. The OECD projects that this could generate around $150 billion of additional revenue globally each year. Korean companies, Samsung Electronics and SK Hynix could be impacted by the first pillar of the tax reform. They will have to pay tax in countries where they provide services when having a pre-tax profit margin higher than 10%. However, the Ministry of Economy and Finance said the newly proposed plan will not cause a significant increase in the actual tax burden on Korean companies.
The introduction of Pillar 1 will make companies pay additional tax to countries where they provide services beside the tax paid in the home country. However, the impact will not be significant because of adjustments to stop double taxation.
A more detailed agreement will be finalized by October 2021 at the G20 meeting and could come into effect by 2023. 서은경, Arirang News.
Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time on this Friday.
Good afternoon.
Well, we've had this rally on Wall Street, especially in the past month, and investors are waiting on a jobs report to come out on Friday. And the jobless claims reported on Thursday were the lowest they've been in the pandemic. So right now the S&P is up and again and sitting at an all-time high. What's the story today in the global markets?
Right. After the sixth consecutive session of rising trend, and most of indexes are showing new fresh record highs, the U.S. futures market right now seems to be a little bit flat for now. In any case, we are waiting for the monthly payrolls, which is due tonight, and which will give us an update on what's happening to the labor market recovery. And it will give some clarity to whether Fed will try to do the tapering within this year or maybe do it next year. So far, some of the data that came out just recently indicates that the recovery is in the right track. The initial job claims actually fell down to 364,000. Which is well below forecast of 390,000, and clearly the job cuts are it is lowest since 1920 in 21 years. And if we look at the ISM manufacturing PMI numbers, it also points to the very nice factory recovery. All in all, this seems to indicate that the economy is in the right track for recovery, despite the concern about the variant of the COVID-19. All in all, this has resulted into yesterday S&P rising by about 0.5%, and also Nasdaq rising by about 0.1%.
And Korean stocks today started out higher, taking their cue from Wall Street perhaps, but closing basically flat. A slight gain on the tech-heavy Kosdaq, though, which is right at a record high. Tell us about the domestic market.
Yes, the Kospi actually ended flat, and also Kosdaq was up about 0.25%. The main reason for that is because there's continuation of uncertainty regarding the currency, and the foreign investors are continuing to be a net seller of the market. Foreign investors net sold about 130 billion won worth of Korean equity. And also on top of that, institutional investors were selling about 230 billion. Only the retail investors were net buyer of 357 billion. So far, we saw Korean won depreciating somewhat with the U.S. dollar index strengthening. And that is resulting into the appetite of foreign investors to be kind of limited. I guess we need to see actual quarterly earnings number, which is likely to come out by sometime towards the end of this month or next month. If that happens, then we think that there'll be more room for the further rise of the Korean equity market. So far, we have seen some of the consumer price index showing above 2% growth rate, which is an indication that the BOK might be doing what they have said, raising interest rate before the end of the year. If we look at also the COVID-19 cases, it actually risen quite significantly high. It's a near 2-month high due to the series of cluster infections in the wider Seoul area, and because of this concern about the virus variant. So far, nothing is perfect, but in any case, export numbers are reasonably good, and that Korean companies' earnings are very strong, so therefore it will try to rise further in the future. But in the short term, they're waiting for the earnings numbers that might come in sometime towards the end of this month.
Switching gears here to look at oil for a minute. West Texas Intermediate, after taking a breather last week, is up more than 2% today to over $75 a barrel. Some analysts talking about it hitting $100 before long. What do you see happening with oil?
Yes, I think that this is clearly due to the supply and demand issues. When the OPEC Plus have discussed about the additional supply, they suggested that they will add 400,000 barrels a day each month from the August to December, which is kind of in line in agreement with Russia and Saudi Arabia. All in all, these numbers are reasonably good number, but the demand seems to be picking up due to the very strong economic recovery that you're seeing in global scale. This has resulted into the oil price rising by 1.5%. I think what you really need is shale gas production, and U.S. seems to be doing nothing at this point with enjoying this rise in prices. Shale gas companies' break-even points are $45 per se. If that's the case, then higher the rate it is, the better it is to clean up their net debt. So this is the trend that we are happening. So demand is picking up, supply is not picking up that aggressively, and that is resulting into the prices rise. But eventually we think that the production from the shale gas companies will increase, and that will result into price stabilization. We don't think the price is going to go to $100. If it happens, it will be very, very short term. We think that very strong supply could happen with a lot of capacity that is already lying around.
And finally, Mr. Yu, Korea's consumer prices last month were up by more than 2%, almost 2.5% for a third month in a row. Grocery prices especially were up because of issues like bird flu hitting the supply of eggs. If this were to carry on, it could be a major issue. But where do you see prices going now in the second half of the year?
Right. The prices are reasonably good, and it came in at about 2.4% rise year on year in terms of inflation numbers. It is fairly high. It was about 2.6% in the previous month. It's coming down slightly, but nevertheless well above 2%. The market consensus was 2.5, so it's slightly below that, but nevertheless, once again, is well above 2%. That means that the BOK will be interested to raise interest rate faster. As you said, some of these numbers are coming through where the food and non-alcoholic beverages rising by 6.5%. So I guess it's kind of agflation per se. And this is a rise of 7.4% in May. It's consecutively rising significantly. And clearly this isn't one issue. Also, the oil price rising would have implications for Korea. As we talk about, it is already $75. It's quite negative in terms of the prices-wise for Korean productions. So, yes, clearly this is an issue. But however, though, in a medium to longer term, we do think that the global oil price would gradually stabilize, and the overall raw material cost as well as the inflations will stabilize as well. We did see that some of these prices coming down very rapidly recently. So all being said, yes, inflation is here, but it's not going to be any per se significantly higher than 2% target. If that's the case, raising interest rate is not going to be significant. It will be somewhat possible, but it's not going to be the case where it will hinder the equity market rise or corporate earnings growth.
Got it. All right. Well, we'll be keeping our eyes on inflation and eggflation, Mr. Yu, and we always appreciate your analysis. Thank you very much and have a great weekend.
Thank you. You too.
South Korea saw its highest daily number of new coronavirus cases in half a year on Friday. There were well over 800 new cases, with more than 80% of them in the capital region. The authorities are on high alert, some predicting the figure could get up to 1,000 cases a day later this month, which might mean stronger distancing. Cho Ryong-hae reports.
South Korea's daily COVID-19 tally on Friday surpassed the 800 mark for the first time in 6 months. The country reported 826 new cases, with the Greater Seoul area accounting for more than 80% of local transmissions for the third day in a row. Health authorities are bracing for further spikes in the capital region as cluster infections continue to increase, especially among young people.
It's concerning to see a growing number of cases among younger generations who are more socially active. For the past week, 4 out of 10 cases were from those in their 20s and 30s.
In the capital area alone, the daily average number of confirmed cases stood at 509. This means Seoul and the surrounding areas have already surpassed standards for social distancing level 3, the second highest of the new scheme. The Greater Seoul area has already postponed the implementation of the new social distancing level 2 by 1 week.
The government will work closely with local authorities to raise current social distancing measures whenever they're needed, and also enforce more effective quarantine measures.
Experts say that the daily tallies could reach 1,000 by mid-July. Some added that stronger measures are needed for people coming into the country from overseas. This comes as South Korea reported 61 new imported cases, the highest in almost a year. The majority were from Indonesia, where the highly transmissible Delta variant is spreading rapidly. Choi Min-jung, Arirang News.
A new study shows that Johnson & Johnson's vaccine will likely offer good protection against the Delta variant of the virus, which is currently the pandemic's biggest threat. The company reported preliminary findings on Thursday showing that the vaccine appeared to work against new variants based on an analysis of blood samples from a small group of 8 participants. And from a separate study of about 20 participants, J&J said the effects of the vaccine lasted for at least 8 months. Prior data for other vaccines, such as those from Pfizer and Moderna, show that they too are likely to hold up against the Delta variant. In other news, in his speech yesterday for the 100th anniversary of the Chinese Communist Party, President Xi Jinping reiterated the CCP's goal of reunifying Taiwan with the mainland. Peacefully, he said, and some analysts have put significant weight on that language. At National Chung Cheng University in Taiwan, Professor Lin Ying-yu noted that President Xi was invoking the so-called 1992 consensus, which he said could leave space for better relations between Taiwan and the mainland. In his speech, though, Xi warned other countries against interfering, telling them not to underestimate China's ability to defend its territorial integrity. For Hong Kong and Macau, Xi said they both retain a high degree of autonomy, but he stressed that they should accurately implement what he called the principles of one China. The Biden administration has designated a number of countries, including China, as participants in human trafficking, practices such as forced labor. It's again named North Korea as one of the worst offenders in the world. Kim Hyo-sun reports.
The United States has named North Korea as one of the worst human trafficking nations for the 19th consecutive year. In its annual Trafficking in Persons report Thursday, the U.S. State Department said Pyongyang was designated as one of the 11 governments with a policy or pattern of human trafficking.
We document 11 countries where the government itself is the trafficker. For example, through forced labor on public work projects or in sectors of the economy that the government feels are particularly important.
The 11 governments also include those of Afghanistan, Myanmar, China, Iran, and Russia. The North ranked among the lowest Tier 3, with the report saying the regime does not meet the minimum standards for eradicating trafficking. North Korea has been in the same spot for 19 years in a row since the U.S. first began publishing the report. It also noted how women and children in North Korea are often exploited in sex trafficking, with the regime making no attempt to resolve such issues. The report included China in Tier 3 for the 5th consecutive year, along with countries like Iran and Russia. Kim Hyo-sun, Arirang News.
And North Korea's second-in-command, Cho Ryong-hae, has apparently kept his job after leader Kim Jong-un reportedly fired several top officials over their handling of the pandemic. State media reported Friday that Cho led a key meeting of the Workers' Party the day before. But footage of the meeting showed 2 other officials not raising their hands in a vote, an indication that they were dismissed. Those 2 are Lee Byung-chul, the vice chairman of the party's Central Committee, and Park Jung-chun, the chief of the General Staff of the Korean People's Army. And that brings us to the end of this newscast. Thank you for watching. Arirang News will be back at 7 p.m. Korea time.